We're stepping directly into one of the most important developments in XRP's modern history, the official arrival of the 21 shares TOXR XRP Exchange-Traded Product, which quietly launched into the European market and instantly positioned XRP inside the same investment infrastructure that institutions have used for decades to manage trillions in assets. And what we're seeing here isn't just a new ticker symbol appearing on a stock exchange. It's the formal recognition of XRP as an institutional-grade asset by one of the most sophisticated digital asset ETF issuers in the world. The moment TOXR went live, it joined a lineup of highly liquid, highly regulated products issued by 21 shares, an issuer managing multiple crypto ETPs with billions under management and a track record of bringing institutional credibility into the digital asset space. The significance for us is not simply the ETF itself, it's the timing, the structure, and the environment in which this is happening, especially as we head deeper into 2025, where regulatory clarity, corporate expansion from Ripple, and market appetite for alternative digital assets has never been higher. To understand why TOXR matters, we need to break down what an ETF or ETP does in the market. For years, the lack of regulated investment vehicles has held back institutional participation in XRP, especially among European pension funds, wealth managers, and 35-plus traditional investors who aren't comfortable dealing with exchanges or self-custody. The launch of TOXR immediately removes that barrier. Now, XRP exposure can be obtained through a traditional brokerage account, retirement vehicle, or any standard investment portfolio. No wallets, no private keys, no exchange onboarding friction. And this matters because historically, the introduction of a regulated product has always triggered a massive shift in the investor base. We saw this with Bitcoin's first ETPs years before US approval. We saw it again with Ethereum, and we saw it reach unprecedented levels after the US approved spot Bitcoin ETFs in January 2024, pulling in over $25 billion in inflows within months. That same psychological and structural shift is now happening with XRP.
Now, let's break down 21 shares itself, because the issuer matters. 21 shares is one of the most respected digital asset ETP providers globally, headquartered in Switzerland, and known for pioneering Europe's earliest Bitcoin and Ethereum ETPs. Their products trade across major European exchanges, such as SIX Swiss Exchange and Deutsche Börse. They manage billions in assets, and they have a reputation for compliance, transparency, and institutional trust. When 21 shares brings a product to market, it's because they see very real demand from institutional clients. They don't list new ETPs for fun. They list them because wealth managers, regulated funds, and hedge funds are requesting them. So when 21 shares launches TOXR, it is an acknowledgement that demand for regulated XRP exposure exists now, in late 2024 and early 2025, not years from now. This aligns with the broader shift we've been observing: increased discussions among European financial institutions, growing XRPL pilot programs, and the stabilization of Ripple's regulatory position after developments in the SEC case. And when we compare XRP's position today with the histories of Bitcoin and Ethereum, the timing becomes even more significant. Bitcoin's first ETPs in Europe opened the door for institutions long before the US approved spot ETFs. Ethereum followed a similar pattern. And in both cases, early European access created a price foundation and institutional familiarity that later contributed to massive global inflows. XRP is now entering that same pattern, only with one advantage Bitcoin and Ethereum didn't have: Ripple's corporate infrastructure that actively builds real-world utility. And that brings us to the curiosity that naturally forms here. Why now? Why is XRP receiving an ETP at this moment, after years of regulatory hesitation? And is this launch a signal that institutional players expect something bigger coming for XRP in 2025? The first question we need to answer is whether this ETF signals wider institutional adoption. And the short answer is yes. Institutions don't allocate to random altcoins. They allocate to assets that have predictable liquidity, strong legal clarity, and corporate support. XRP now has all three. The clarity from Judge Torres in July 2023 established that XRP is not a security when sold on exchanges. Liquidity has remained consistently high with deep order books across major global exchanges, and Ripple, the company that builds infrastructure around XRP, continues to expand aggressively, which we will explore in detail later. But the ETF itself is only part of the story. The bigger question is, does this launch hint at future filings from major U.S. institutions? Could BlackRock eventually consider an XRP investment product when U.S. regulatory clarity becomes clearer? We have no official statements, but the pattern is familiar. Institutions move first in Europe, then push for U.S. approval once there is traction.
Another curiosity that flows naturally is the potential price impact. Historically, ETF or ETP launches do not cause immediate price explosions. What they do is create new channels for slow, steady institutional accumulation, the exact type of buying pressure that changes long-term price structure. This is what gold experienced after the launch of the first U.S. gold ETF, GLD, in 2004, which led gold to climb over 300% in the following years. This is what Bitcoin experienced after its ETF approvals. And with XRP, the structural setup is arguably stronger because Ripple is simultaneously building real-world payment and liquidity solutions that bring organic demand. Now let's expand beyond ETFs and go deeply into the global regulatory environment that created the perfect timing for TOXR. Europe has been ahead of the US when it comes to crypto ETPs for years because of a more straightforward regulatory framework. With the introduction of MiCA, Europe essentially formalized crypto as a regulated asset class, giving issuers like 21 Shares a clear pathway to launch new products. Meanwhile, the US remains complicated because crypto laws still rely heavily on interpretations of the Howey test. Even though XRP received partial clarity in 2023, US ETF issuers are still cautious because the SEC's stance on crypto remains inconsistent. So Europe became the natural home for the first major XRP ETP. But Asia is equally important here. Financial hubs like Singapore and Hong Kong are aggressively positioning themselves as global leaders in digital asset finance. Hong Kong approved spot Bitcoin and Ethereum ETFs earlier than many expected, showing a willingness to push innovation forward. And Singapore continues to be one of Ripple's strongest regions, with MAS, Monetary Authority of Singapore, consistently supporting regulated blockchain applications. These Asian markets could become early adopters of future XRP products, especially as remittance and payment flows in the region rely heavily on RippleNet technologies.
Now that regulatory dynamics are clear, we need to talk about liquidity, because institutional demand doesn't exist without liquidity depth. One of the biggest advantages XRP has is its high transaction throughput and low cost. Institutions care about this. Settlement speed matters when you're moving millions across markets. XRP's historical daily trading volume often ranges between $500 million and $2 billion, giving it one of the deepest liquidity profiles outside Bitcoin and Ethereum. This makes XRP a strong candidate for ETF adoption. When we compare liquidity profiles of assets that already have ETFs, Bitcoin, Ethereum, Solana, the pattern is clear. Institutional assets must have liquidity, predictability, and infrastructure. XRP fits this profile more now than it ever has. And now we enter the section you specifically requested, Ripple's 2024-2025 strategic moves, which is a massive part of why TOXR launched now and why the future for XRP looks dramatically different than it did just 2 years ago. Ripple is not behaving like a small blockchain company. Ripple is behaving like a global finance infrastructure firm preparing for institutional integration at scale. Let's start with one of the biggest moves, Ripple's acquisition of Rail, a company specializing in stablecoin-friendly enterprise payment systems. Ripple spent $200 million on this acquisition, and that alone should signal where the company is heading. Rail provides interoperability, compliance tooling, ledger-agnostic transaction layers, and settlement infrastructure, all things that institutional networks need when connecting fiat and digital liquidity. Ripple didn't buy a brand or a marketing opportunity. Ripple bought infrastructure that directly strengthens XRP's role as a settlement asset. When we consider ETFs, stablecoins, and cross-border payments as intersecting liquidity worlds, this acquisition becomes a strategic masterstroke. But Ripple didn't stop there. Throughout 2024, Ripple Payments expanded aggressively across key financial corridors. In the Middle East, partnerships with payment providers and banks continued to grow, especially in the UAE, which has positioned itself as a regulatory safe zone for blockchain finance. In Japan, SBI Holdings continues to push XRP applications into mainstream finance, including remittances, digital asset exchanges, and enterprise settlement. In Latin America, Ripple's partnerships with institutions like Novati and Tranglo continue to strengthen XRP's utility layer.
And in Europe, Ripple is collaborating with regulatory-compliant payment networks that align perfectly with MiCA frameworks. Each of these regions represents billions in daily cross-border settlement volume. When an ETF issuer sees a corporate network expanding this fast, it reinforces confidence that the underlying asset, XRP, has durable, long-term demand. Ripple is also preparing one of its most important products, a Ripple stablecoin, planned for release in 2024 or 2025. This stablecoin will be fully backed, audited, and designed to integrate directly with the XRP ledger. This changes the game. Stablecoins are the primary liquidity engine of crypto, and Ripple entering this market gives XRP a direct connection to global stablecoin flows. Imagine an ecosystem where institutions use Ripple's stablecoin for liquidity provisioning, while XRP powers settlement rails. This layered ecosystem creates a reinforcing cycle. More stablecoin usage, more XRPL activity, more settlement demand, more usage of XRP as a bridge asset. And when these dynamics solidify, ETFs become significantly more attractive because the underlying asset is not speculative, it's structural. Then there are Ripple's ongoing CBDC and central bank partnerships. Over the last few years, Ripple has quietly built relationships with multiple central banks exploring digital currency pilots. Bhutan, Palau, and several unnamed banks in Africa and Asia have tested pilots on or with XRPL technology. Even though CBDCs do not necessarily use XRP directly, they contribute to the overall credibility and infrastructure adoption Ripple needs to secure long-term institutional interest. And institutions prefer ecosystems with government-level integrations. It reduces perceived risk. Ripple's XRPL upgrades are equally important. Features like the built-in AMM, automated market maker, hooks, smart contract sidechains, and EVM compatibility significantly expand what the XRPL can do. This attracts developers, liquidity providers, and financial applications. The more activity occurs on XRPL, the more valuable XRP becomes to institutions. And when we overlay XRPL expansion with ETF availability, we get a clearer picture. XRP's value proposition is transforming from a speculative asset to a core liquidity asset with global integration.
The combination of Ripple's acquisitions, ecosystem upgrades, and multinational partnerships forms the underlying foundation that 21 Shares evaluated when launching TOXR. ETFs don't launch around hype, they launch around infrastructure, demand, and strategic readiness. XRP now has all three, and if we're being realistic, XRP is entering 2025 with more corporate momentum than any other altcoin. Ripple is acting like a future settlement giant. XRPL is evolving into a high-value infrastructure layer. Institutions are paying attention, and TOXR is the first visible sign of that shift hitting regulated markets. Now that we've established the corporate and ecosystem context, let's talk about XRP's potential price structure as ETFs begin to influence market flows. The immediate impact will likely be slow but steady accumulation. Long-term price shifts will come from the combination of ETF inflows, Ripple's expansion, and the growing global regulatory alignment. Analysts have already projected multiple scenarios. A conservative scenario sees XRP gradually rising as institutional inflows increase over 12 to 18 months. A moderate scenario anticipates significant growth if Ripple's stablecoin succeeds and if more financial institutions adopt XRPL payment rails. The aggressive scenario, dependent on U.S. approval of a future XRP ETF, would introduce massive volume from retirement accounts, financial advisors, and institutional allocators who currently only invest through regulated vehicles. So listen, if you feel like Ripple's recent moves, the ETF launch, and the growing regulatory clarity are forming a completely different future for XRP, then hit that like button, because we're clearly looking at this from the same logical long-term perspective. Now let's continue. The conclusion here is straightforward but powerful. The launch of the 21 Shares TOXR XRP ETF marks the beginning of XRP's integration into institutional finance. Ripple's 2024-2025 strategic moves have created an ecosystem strong enough for regulated products to emerge. Global regulatory developments are aligning in XRP's favor. Liquidity, infrastructure, and corporate expansion are converging at the same moment. ETFs don't explode markets overnight, but they change the investor base, and that's what truly shifts long-term value. As we move further into 2025, XRP is positioning itself not as a speculative altcoin, but as a foundational settlement asset with global reach, and the institutions entering the market through TOXR are the first wave of a much bigger movement.